Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we're talking about how to analyze the Forex market. Now, analyzing the market and actually trading market are two separate things. At least that's the way I look at it. When you're analyzing the market, you're more focusing with direction, and when you're actually trading the market, you're looking for high probable patterns that normally give a move either to the upside or to the downside that you can actually buy and sell. Whereas analysis is focusing mainly on direction and mapping out key areas in the market, which we'll get to today. If you're looking for trading strategies to do with entries, managing exits, I do have videos on that in my Forex education playlist. Check it out, links in the description, or just head over to my channel. But today we're going to focus on chart analysis. So as you can see on my screen, I've got pound yen on the 4H chart. And I'm just going to analyze the market like I normally do on my live streams or my weekly analysis. If you haven't checked that out, again, go check it out if you want to. It's on my channel. But I'm going to show you guys how I go by analyzing the market step by step. Now, there's two key things I'm looking at when I'm analyzing the market: direction and key areas. That is it. So the analysis part of my trading is just finding direction, finding areas of value, and mapping out ranges to trade between them. Then I'll go on to spotting patterns and actually trading and finding entries to trade my analysis. So as you can see, here is pound yen in the 4H time frame, and the first thing I always do is just map out the key areas in the market, and this is just key highs, key lows, and key turning points in the market where we've seen the market test certain areas multiple times and rejected from it. So the key thing you want to do is when you're doing this is just focusing on a particular time frame. For me, I spend most of my time on the 4H time frame. For you guys, might be the daily or the 15-minute, whatever. You just need to have a time frame that you're going to be mapping out key areas and mapping out structure and just basically working out your directional bias. So for me, this is the 4H time frame. So a key obvious level I can see in the market here. Let me change that color to blue so it stands out a little bit more obvious. So I've got a key level here. You can see it has acted as resistance, support, 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 briefly resistance and support again there. So I can see this is an obvious level in the market, and if it does return here, good chance we're going to see some type of reaction. So that is fitting my my plan of how I want to analyze the market. A key high that stands out to me is this one here at 172. That's a key high in the market that we bleed to the downside. Again, no real data here that the market has previously reacted before, but we've just got a pinpoint high that we're working with. And also, I do want to clarify, when I am analyzing the market, I'm only looking at this kind of data here. So again, some people have asked me how many candles should be looking at. If I just roughly go from this, you can see I'm roughly looking at around 234 bars. It's not always going to be 234, but around that mark, 200, 250, maybe 175, whatever it is, just around that mark is how many candles I'm looking at. I'm not scrolling all the way back here to analyze the market. That's just too much information. It will probably confuse you, and quite frankly, that's just more higher time frame analysis. That's like daily chart, weekly chart. We're focusing on the 4H time frame, which is just this data here that we can see. So this is the clear high up there at 172. This is a clear low that I'm looking at here as well. Again, these are not areas of key support resistance, just key highs and key lows that we've mapped out. So like I said, key support resistance levels, key levels, and I just missed my finger there, and key highs and lows is what we want to be looking at. And another key level that has caught my eye is this level there. I didn't quite test it there, but we had two important resistance and a big test of support. Big move to the upside around 162.380. Another key level that has grabbed my attention is this area here. You can see key support, nice move to the upside, resistance again, and resistance there briefly a couple of times. So this is all I would have in my market. Again, 2-3 key levels. You don't need to have more than that. If you do have more, you're going to get quite messy chart, and you're not going to have clean ranges to trade. Again, depends what time frame you're on, but this is the 4H time frame. You can see 230 odd pips. We're looking at 294. We're looking at 340, and we're looking at just over 300 as well there. So really clean ranges with a lot of pips. And this is our directional time frame. I use the hourly to enter my trades, so we'll drop into the hourly in a second. But from just a key level perspective, we've got nice ranges to work from. So that's the first step: analyzing the key highs, key lows, and mapping out the key levels in the market, areas where we could potentially reverse. Then the second step, and there's only two steps, the second step is mapping out the structure of the market, in which gives us a directional bias and the probability of where the market could go next. So you can see the market's gone from making higher highs over there. So we'll see the high, a higher low, higher high, higher low, higher high, then we got the equal low retesting the support, lower high, and we broke structure making a lower low, and the market potentially could be forming a lower high or could break higher. So this is the structure that we've got. So I'm looking at the key levels in the market, and I'm also looking at the market structure, and that gives me my kind of nutshell of how I'm analyzing the market. Now the next job is to actually look for a potential bias and potential area you could head to next. So we know we've got some bearish structure here since you did break through the price swing low. The market potentially could be retesting this high to form another lower high and another move to the downside. That could well be a possible move. So from a bias standpoint, bearish does make a lot of sense. And at the same time as well, we could be seeing the market break above this high to continue higher in a larger time frame trend, because we do know that higher time frames are still bullish, looking on the daily chart as well. So we could see the market also trend higher, as you can see. So from a 4H perspective, we've got two key levels we could be heading towards: 172, which is a prior high, or this zone here at 165,500. Now we can drop to the hourly time frame to actually trade it. So that gives us a whole analysis. We've got clear direction. If price breaks through this, we're bullish. If price holds, we're bearish. And we've got clear targets to work with. If we're bullish, we're looking at 172. And if we're bearish, we're looking at 165,500. So we've got clear analysis to find. We've got set requirements for our direction, if we're going to go buy or look to sell. And we've got clear targets where we're looking to sell and buy towards. Now you can drop to your entry time frame to look for your entry signals. And again, now here's where you want to be looking for your patterns, your entry signals to actually buy and sell the market, which is a completely different ball game to actually analyzing the market. You could be a very good chart analysis, but a poor trader, and you can be a very good trader, but a poor chart analysis. Two different things. And now from an hourly perspective, we do have a key trend line here. Again, this is more just looking for entries of the market. If you do see a nice break of that trend line, potentially a break of this level here. If I change this color, because this is the hourly time frame. So let's say we get the break of that, a break and retest of this level will look good for some shorts. Then we can actually trade that bias, break and retest, and then move into that level, something like that. So that could be the way we trade the market. Again, whatever your strategy is, breakouts, whatever, this is the time you use that strategy. But in terms of analysis, we know exactly where we could go and exactly where we could go to the upside or to the downside, which is both important. Because you don't want to be too rigid and just think, okay, we've got lower high potentially, I'm only going to look for sales. We can still take a bunch of the buys just in case our analysis is originally wrong as well. So that's how we can look to trade the market. Again, do have videos on that, feel free to check it out. But in terms of analysis, this is what you want to be looking at: key levels, key highs and lows, and set requirements that you have in your analysis that will tell you, okay, now I'm looking to go long, or okay, now I'm looking to go short. So guys, try and practice this. Again, you don't want to have too much candlesticks to look at. Around the 200 mark is kind of the soft spot. Again, I would say 2-3 levels max, pinpoint some highs and pinpoint some lows. So these are not necessarily key levels, but just key highs and lows to work with. So you want to have 2 or 3 levels max, and just practice. Use the replay tool, practice going through past price action on whatever chart you're analyzing, and just see how the market reacts to the levels you map out. See if you need to work on that or if they're good, and then you can focus on your trading. But yeah, guys, that's how I analyze the market. It's not anything too complicated. You know, I want to have clear analysis that is easy to do, and then I can start looking for my entries to actually trade my analysis later on. And I will be doing some more videos on actually trading and patterns that I look for, and patterns you could use definitely as beginners at least as well. So do make sure you subscribe to look out for that. But thank you so much for watching the video. Hopefully you have found it useful. If you have any questions or didn't quite understand anything, let me know in the comments down below, and also let me know if you have any other video suggestions as well in the comments, and I will get to it, guys. But thank you so much for watching the video. Have a fantastic day, and I'll catch you all in the next one.